All right, traders, good evening. I almost said morning. It is Friday, January 23rd, and I am doing my live session for YouTube that I would normally be doing on a Saturday morning. But because I'm going to be flying out to New York City early in the morning trying to beat the winter storm, I am doing my live swing trade setup broadcast on Friday evening. So, thanks for joining me. If you don't mind, take a second here and hit the like button. Takes a couple of seconds on your part, but it gives me um, so a chance to be seen on YouTube for traders that are looking for potential actionable trade plans for swing trade setups. So I certainly appreciate you hitting the like button. Make sure you're subscribed to the channel. And yes, Janet, you are in the correct place. Howdy from Janet's coming from Oklahoma. I'm in Florida right now where I live, but tomorrow morning, very, very early, I will be leaving the 70 and 80 degree temperatures to go and visit my daughter up in New York City where it's going to be much colder. I think I might be crazy, but that's all right. It's going to be a good time. My sister is retiring from teaching and she has her retirement party on Thursday night. So I didn't want to miss that, and I get a chance to visit my daughter. So good times. But that is why we are coming live tonight rather than tomorrow morning. So let me real quick just share my screen with you so that we can get started here on our swing trade setups for this week. I want to start out like I always do, and that is from a top-down approach looking at SPX. Now, SPX, if you have been around in the live trading rooms with me, you know that I have been very active in trading SPX, mainly day trading, but definitely some swing trading as well. I just taught a class on it. We did 4 live trading session deep dives into the process that I use to trade SPX. Very happy to report that I hit my profit goal both of those weeks to make my goal was to make $2,000 a week day trading SPX. Hit those goals for both of the weeks, and so it was a great time. So if you join me for the class, thanks for signing up, and hopefully you got your money's worth out of the class. I thought it was an excellent class, and I know that I definitely appreciate the process I use to trade SPX. So I was happy to share it with traders that maybe struggled in the past to day trade SPX. Anyway, SPX is close to my heart, so I like to give you the top-down approach of the SPX. On the weekly chart, last week, not the week that just passed, the bell that rang today that ended this week, but last week we finished with an inside candle. And this week we technically closed lower than what we did last week by about 25 points. But honestly, it's really not a candle that tells me a whole lot as far as in what direction the market is going to head next. I'm not big on speculating those things. What I am big on is knowing on each time frame chart where I would be a buyer and where I would potentially be a seller. And looking at the weekly chart on SPX, I know that I have resistance or a potential sell zone from 69.40 to 69.86, the all-time high. This is resistance on the weekly chart, and so if price is pushing up into this area of resistance, I know that I want to be cautious as far as trades that I am in to the upside. Now, I also like to know where I would potentially be a buyer at on this chart. The first area that stands out to me is 68.50. That is the 38.2 Fibonacci, but it is also where price consolidated here and has bounced off of this area, coming up and creating the new all-time high. So 68.50 is an area of support on the weekly chart, but also the 50 and the 618 fib is actually where this week on Tuesday, when we had the big gap down, price pulled back into this area, and as evidenced by this bottoming wick, there was definitely buyers waiting here to buy a dip, which we did happily. In the SPX room, we did buy the dip on a swing trade and made very nice profits off of that. So immediate support here is going for me is going to be 68.50, and then back in this zone of 68.08 by 67.66. Now let's look at the daily chart. All right, same thing. I want to know, where would I be a seller, where would I be a buyer, and where are we at in relationship to those zones. So first off, I can see that I have a double stack of trendy edges right here. This is an upper weekly edge and an upper monthly edge. You can see that on Thursday and Friday, this double stack of edges was indeed resistance, even though we wicked up above here and actually wicked up to the sell zone. Up to the sell zone. Price could not close above this double stack of edges. So when we open up on Monday, if price is basically flat on the ES futures when we open up on Monday, then SPX would be opening up right here, and we would be opening up right into this resistance at or around 69.20. All right, you did find support. We closed 2 days above the daily 21, 2 days above the EMA cloud here. That is a good sign for the bulls, but really you have two indecision candles on Thursday and Friday. Not a lot to go off of. You had a gap down, a bearish candle into a buy zone. Then you had a bullish engulfing candle that took out all of that downward price action, and now 2 days of indecision. Not a lot has been made clear just yet. I'm not surprised because we are right in kicking off earnings season, and typically this is what we get. This time of the year is pretty much a flat market until some of the big earnings reports come out. Looking at the 4-hour chart on SPX, there's not going to be much different, except you do have a 4-hour inside and up candlestick structure here that's going to line up with basically the monthly edge mid on my chart. This area I am looking for support at 68.33 here on the 4-hour chart. And like I said, we're right at resistance, and the sell zone is 69.37 by the all-time high 69.86. Now, as a little bonus, I'll go ahead and show you the day trade blueprint for Monday. Now, of course, I have no idea what's going to happen Sunday night when the markets open, back up for the Asia session and the European session. I have no idea what's going to happen, but I do know that I have this sell zone here at 69.37 by 69.86. My first buy zone is a buy zone that on Thursday and Friday were buy zones. And price came and sat in this buy zone for a while, but we got moves out of it. Buyers were stepping in 69.05 to 68.87, and so the buy zone is still there. Do note that if we get pullbacks, I am looking for confirmation in this buy zone because it has been tested so much. Basically, every candle on Thursday and Friday tested this zone in some way, shape, or form. So if this buy zone breaks on Monday, my next zone that I would be concentrating on to potentially buy a dip is 68.72 to 68.57, and then right at my monthly edge mid, which on higher time frames, remember this was a 4-hour inside and up candlestick structure. It's also a 2-hour inside and up. Major buy zone here, 68.33 to 68.04, and then back at the buy zone that we traded all the way up to the sell zone on Tuesday at the end of the day when we bought that dip. All right, now let's talk about, I told someone in one of the live trading rooms that I would go over how I decide what I'm going to potentially trade. So I use the website koifin.com, and what I'm doing on this website is I'm looking for the US sectors that are outperforming the overall market from a different time frame look backs. I like to look back over the last year, over the last quarter, over the last month, and even the last 5 days, just to get an idea of what is the strongest of areas of the market. So I pick the sectors that I regularly follow to get an idea of where price is setting and what is leading the market. So if I look back over the last year, and I write these down on a little sticky note, you'll see it right here. Can you see that? I write it down on this sticky note, and I mark the top 5 looking back over the last year, quarter, month, and week. So if I do that, you can see the top 5 is going to be gold miners, metals and mining, semiconductors, the technology sector, communications. That's looking back over the last year. Then if I look back over the last 3 months, right, you can see that is gold miners and metals and mining still in the top 2. But then notice the difference. You see oil services, the semiconductors is there. Oil services was not in the top 5 looking back over the last year, but it is looking back over the last 3 months. That means that oil services has shown relative strength to move up into the top performing sectors. Semiconductors is still in here, and then jets, the airline sector, which has really just been pretty much flat since it rallied in November. Been pretty flat ever since then. So it's just hanging out here. It's up about 15.5% right now. Looking back over the last month, I also note the top 5, not a lot is different. Metals and mining, oil services, and gold miners still up here in the top 3 like it was looking back over the last 3 months. Then you have energy sector that has made its way into the top 5, and the semiconductor sector is still in the top 5, but see how it's kind of trending more to the downside than these other sectors. All right, looking back over the last 5 days, the gold miners, metals and mining, oil services still up here at the top. But notice that oil and gas exploration is in the top five now, as is energy, which was in there also from a month look back, and then agriculture. So you see how you're getting some rotation out of your big names, the tech sector, the Apples, the Microsofts, the Mag 7 names really. They have kind of worked their way down here towards the bottom rather than being at the top. And you've got some of these areas that have been up here pretty much the entire year. But then you have some of your more defensive areas of the market making their way up towards the top. And so that's just evidence to me that we have experienced some sector rotation so far leading into the first 3 weeks of 2026. All right, so I'll use koifin.com. That gives me my relative strength, the sectors that are doing the best, and then from there I have a flexible grid with all of those sectors. And what I like to do is I like to go through those top sectors, such as gold miners. That was on all look backs as being one of the top five. And in here I have the highest weighted or the highest concentrated names in gold miners. And what I'm looking for is, but first off, is everything in an uptrend. And it's pretty obvious to me. You got green candles, and all your EMA clouds are pointing to the upside. I'd say ABX here is probably the weakest out of these names, but it is still strong. And everything's in an uptrend. The sector looks great. I could pick individual stocks to put on my watch list, or I could simply just have the sector itself on my watch list. That is what I have chosen to do rather than putting some of these specific names on the watch list. I have the sector itself on here as well as GLD to potentially trade gold that way because it's definitely an outperformer. Sorry guys, I talked all day in the room, so my voice is kind of gone. All right, so gold miners, I have chosen just to look at potentially trading the sector itself on a pullback to demand to a buy zone, and that's where I'm choosing to focus. Up next, I'm going to look at metals and mining to give you an idea of some of the names that trade inside of that sector. And you can see here all the different names. You have Hecla Mining, CDE. All of these look great. They're all in an uptrend. One thing I will say is because we're in earnings season, I am very careful not to necessarily trade names that are going to be reporting earnings soon. And by soon, I mean within the next 2 weeks. So I'm looking more at having names on my watch list that have just reported earnings or reported earnings long enough ago that they don't have the earnings coming right up. All right? Don't worry about it, Anna Marie. We're just getting started. You can hang out. You know how I look for relative strength. That's mainly what I talked about. And then Anna also talked about the SPX from the top-down approach. So you'll be fine. Hang out. You can watch the replay or the first part if you would like. We've only been going for about 19 minutes, though. All right, so with The metals and mining sector, I do have a couple of names on here that have just reported earnings. Alcoa being one of them, and then Freeport being the other. So Alcoa up here and Freeport here have reported earnings, so I have them back on my watch list in this very bullish sector. And some of these that haven't reported earnings yet or are reporting earnings soon will go back on my watch list if they stay in bullish trends and this sector continues to outperform. I will add them back to my watch list after they have reported their earnings. All right. Up next, oil services. Remember, that was another top performing sector. I do the same thing. I come in here. I'm looking for the names that have reported earnings. A lot of these names are reporting earnings in the next 2 weeks. They're just not going to make my list. But Halliburton has already reported earnings, and Schlumberger has already reported earnings. So both of those names are on my watch list for potential trades next week. Semiconductor sector still remains, even though it is, more tech heavy for sure, more NASDAQ for sure. It remains in the top 5 across all time frame lookbacks. So I'm not going to discount it or take it completely out of the picture, but notice that I would have to be more selective. So I'm not going to pick the names that are not strong, showing relative strength in this sector. Why mess with the things that are lagging behind if I'm already not super excited about trading a tech heavy sector? I definitely, if I'm going to, want to pick the things that are outperforming. And for me, they also need to have reported earnings. So, such as TSM, Taiwan Semiconductor, reported earnings back on the 15th of January. So they got those earning reports out of the way. And Taiwan Semi is actually relatively strong, and it has been doing well. So I have it on my watch list here and will potentially, possibly, get a trade out of it if price were to pull back near this lower weekly edge or near this daily demand zone down here, and we will chart that out together. Someone asked here, Green Eggs and Cam asked about Intel, and just so I'm transparent, in the trendy room at Simpler Trading, where I trade live with Trendy John each trading day, we are in Intel as far as my portfolio, and then the members there that followed my trade in Intel. We are long equity in Intel from much cheaper, as in $17 or $18 back when it was way lower. So this right here, it got all the way up to $55 plus. And yes, it gapped down, but like you said, Cam, it gapped down into a daily demand zone. So absolutely, Intel is on my watch list for next week, and we will chart that out together. Now, I wanted to go over some other ways. When you get into earnings season, it can really, for me, unless you're someone who likes to trade earnings, which I don't. And it's not because I'm scared of earnings reports, but very simply put, I trade from a cash account, meaning I'm buying calls and I'm buying puts. The problem with earnings report is the implied volatility tends to be very high. That means you're paying high premium for calls and puts in names that are reporting earnings. what happens after the earnings report comes out, regardless if the report is good or bad, the implied volatility gets crushed. And when it gets crushed, the price of the options get crushed as well. So it's just not a good idea for someone that trades straight up calls and puts to necessarily play those earnings plays. If you're selling credit and taking advantage of the volatility crush, that's great. I just don't prefer to trade spreads and things like that. So that's why I avoid things going on or having earnings very soon. But I can find names that may not be in all of my watch lists by looking at this on Toss. It is a watch list and it's called Active on Social. The Active on Social, the reason it gets my attention is because I know these are going to be names that are liquid, meaning they get a lot of attention, and so it's easy to get in them and out of them. And I will just go through this list if I want to add any names to my potential swing trade watch list. And I like to look at the daily charts, and I'm just looking for a good looking chart. If you can't look at a chart and say, ooh, that's a nice looking chart right away, then you probably should skip it. And right away with Archer, this is one that I would skip. This thing is stuck in this trading range right here. It's just isn't something that I'd want to trade. You got EMAs all over the place, above it, below it, and it's just really stuck. So it's not something that would make my list. And I can look at this name, ALT. It's really not some, I don't typically trade names that are under $10. So it's probably not going to make my list. You got BABA here. Of course, I want to know when earnings are. They're the middle of February. So technically, I have enough time. BABA for me would need a pullback all the way back here to about 156 to be a trade. And if I'm being honest, I just don't like to trade BABA, so it wouldn't make my list. CDE is on my list. This is a metals and mining type of stock, a gold miners, I believe. No, just a mining stock here. GE, I believe they had earnings recently, right? And I think they pulled back pretty hard. Yeah, they pulled back pretty hard. GE did. So this is something that could get my attention, even though it's had this big pullback on earnings. I'm not going to put it on my list for this week because the earnings just happened, and I like to give that a little bit of time to shake out, especially with the market right up at resistance, right up at sell zones. I'm going to give that a little bit of time to shake out, but I do like to trade GE, and especially if it pulled back into a higher time frame demand zone, it would definitely have my attention maybe in the next couple of weeks. All right. GLD, of course, is on here. HIMS is reporting earnings the end of February. This name has just taken a beating recently, but it is in a higher time frame buy zone or demand zone. What I would want to see on HIMS, or the way that I would trade HIMS where price is at right now, is if I wanted to own this stock long term, or I wanted to trade some leap type trades just because of where it's at. It's right at the lower yearly edge, and this is more leap type trading for me. So I'm not going to put it on my swing trade list, which is names that I'm typically in for a couple of weeks, maybe 4 weeks. JPM is on the list. I know that financials have reported earnings. They pulled back quite a bit. JPM pulled back. It's under $300 now. It got all the way up all-time high 3 weeks ago at 337. It reported earnings, but again, I like to let it shake out a little bit before I start trading it back to the upside. And with that being said, though, it is right at lower weekly edge. It's back at this daily demand zone. It's actually coming close to its daily 200. So JPM might be one that I keep an eye on here. You got these names, Moderna. Boy, that thing got clobbered after 2020, right? After COVID, it just got clobbered all the way down to like $22 down here, but it's had a nice rally, nice 3 week rally. This one needs to cool off a little, so I wouldn't put it on my list. MU, a rocket to the upside. They don't report earnings until March. This one's a little bit too expensive for me to trade in my trendy account, the account that I trade in the room live, because it's a smaller account and these options are a little too expensive. But MU is definitely, if you're looking for a semiconductor stock to trade to the upside, I would tell you I would be interested in being a buyer on MU right here at the lower weekly edge, about 366 and a half, and then you have this buy zone at 353 to 318. That's where I'd be a buyer and look to buy a dip on MU, playing it back up to 406 by 412. Netflix is a long-term play for me. I'm already in Netflix, both equity and a long-term options play. Reddit has gotten a lot of attention. It really pulled back, but it found support right where I was thinking it would. Now, it's under a little bit of pressure. You've got the EMA cloud that price is now under, making it resistance at this point. So if I was trading Reddit RDDT, right, from 211 to 197, this buy zone, my first target would have to be up here near 226. And then you have an inside and down right there also. The top of the cloud, the daily 21 SMA, and this topping wick. That's your next area of resistance by the upper monthly edge. So my next target would be 136 and 142. But ultimately targeting Reddit to get back up to 250 to 263. But this thing, there's much better names that I could focus on than Reddit right here, and so I'm gonna pass on that. It also has earnings within the next 2 weeks, and so I would just rather stay out of the way. What I would guess that Reddit's going to do over the next couple of weeks leading up to the earnings report is be pretty choppy here between 211 and 226. So that's another way that you can find names to add to your watch list if you have Thinkorswim, is using this active on social, because it's names that are getting movement, getting buyers and sellers coming in, and so it's easy, nice liquidity, and easy to get in and out of positions. All right, let's go to my list, and real quick, I'm just going to look at these names. I focus on the daily charts whenever I'm doing these swing trade possibilities with you guys. Alcoa had went off of my list because of earnings, but now that they have reported, I can see I do have a top of chop here. It is an inside and down candlestick structure. I've got a trendy edge up here. That means my target on a trade, this would be my target. Now, as far as support goes, that's going to be here between 59.81, and I want to come down just a little to get this bottoming wick right here. Notice the lower trendy edge right in here. That is a playing field of demand. It is a buy zone for a trade that I would intend to be in for a week. That would be the buy zone there that I would look to play it back up to 64 by 67. And then if we break out above 67, it looks like it might be the all-time high, but it is not, because on the weekly chart you have candlestick structure up and to the left. Now, the reason Alcoa is finding resistance there at 67 is because you have this big old inside and down candlestick structure here, and it goes way up from 67 to 91, and really there's a zone just above there as well. So a lot of this is a very wide sell zone, and it's because of these big imbalance candles here. So as far as the upside target goes on Alcoa, I'm going to find that on this weekly chart. And you can see it definitely hit that last week, and then it pulled back from there, and now we're just consolidating here. Earnings are behind us. It reported earnings yesterday, it looks like, and not a lot happened according to that weekly candle. So the top of this zone is that 67. Then I know I have a sell zone all the way up to $90 on that weekly chart. All right, so all of this would be selling pressure in here on Alcoa. But nonetheless, because the metals and mining have been so strong, I would be interested in buying a dip down at 59.81 to 57.51, playing it back up to 64 by 67, and then just riding price up if we break above $67. All right. Applied Digital is another name. This thing, unfortunately, I was not focused on swing trades. And this week, while I was teaching SPX class, it pulled into the buy zone and made it all the way to target. So I don't know if any of y'all caught this past week, but nice trade there. The buy zone would still be the same place as I gave you last week. And now the target would be, I'd bring this down to the upper weekly edge and say that the target is 38.25 to 40.20. Okay? Janet, do I use ETF DB to choose my top stocks? I do. Yeah. Sure do. Okay. So that would be the buy zone again for Applied, and that's the sell zone. It's very choppy. So I want to be a buyer at the lower end of chop and a seller at the upper end of chop. And so that's how I'd play Applied Digital. ASTS is another name that has been really hot. It has earnings of 1st of March, so I have enough time. My lower weekly edge on AS. Oh my goodness. Woo! Y'all, I go to sleep early, okay? This is my bedtime, so I apologize for yawning, but I wanted to get this done before I fly out. So my buy is going to be here. I've got an alert set for the lower weekly edge, this buy zone here at 99.70. But then the bigger buy zone is 94.61 by 83.91. And I would just simply play it back up here where there is obviously been selling pressure. You have an upper weekly edge up here near 118. So that would be the play on ASTS. I mentioned that CDE is a mining name that I would be interested in trading. I just want to take a look. Yeah, we have till the middle of February before they report earnings. So a quick pullback on CDE to 23.16 would be a buy the dip for me. I would look to trim up here at about $26 and then target 28.80 by 31.97. I would like this if we get that pullback, and a stop would be a daily candle close below 2017. So I've got about a $3 risk here, about a $3 reward to first target, and then about $5.50 to $9 at my upper target there. So a 1-to-1 for first target, and then all the way up to a 3-to-1 for the second target up here. CPRT is another name that is still on my watch list. It's on here from last week. A pullback again to this buy zone at about 40.13. I'm going to go ahead and put an alert at the lower weekly edge so that I would be alerted a little bit ahead of time before the buy zone. But this would be where I would be interested in buying a dip. The stop would be a daily candle close below 39.45, and I would be targeting 41.13 and $42 there, and then ultimately 42.68 by 43.70 for CPRT. Dollar General, I went ahead and left on my watch list. It has had a pullback here, basically 1, 2, 3, 4, quite the pullback. So you create an inside and down right here, right? Then you create an inside and a down right there. So I've got a couple of targets up north of price. My dip buy would be here at this imbalance candle, 142.77 by 139. Then I would want to trim up near 147.10, 150.44, and 154.75 on Dollar General. Freeport was a metals name that I told you we got through earnings, so it has made my list. It looks like, let me just check, max available. Wow, Freeport is up near all-time highs, so that's awesome for them. Looks like the all-time high is 64.62. Your sell zone price is right at that sell zone right now. Okay, so obviously I'm not a buyer. I'm not looking to go long with price right at a sell zone. But on a pullback, I would be interested in buying a dip and then playing price back up to potentially make a new all-time high. Wow, That sell zone was created in 2008. That's been there a while, hasn't it? All right. So that would be the sell zone for Freeport. And you can see we're right there. As far as the buy zone goes, whoops, a little too much there. Okay, you had this consolidation and then the move up. So this is a great looking buy zone. Just not, I like this buy zone, but I do have a buy zone a little bit closer that I would be interested in trading off of on a pullback right here. This is your inside candle and then your up candle. So it is closer than where the bigger zone is down here. It's closer to price. I've got a couple of things going on here. Number one, the candlestick structure is the candlestick structure I like to trade, the inside candle. But number two, you also have trendy edges and EMAs right in this zone as well. So my buy the dip area for Freeport would be here, 53.63 to 49.91, and then I would be targeting $60, then the all-time high of 64.62 on Freeport. Up next is the gold miner sector. I told you rather than having a bunch of individual names, I would rather just focus on the actual ETF itself. The lower weekly edge is 101.53. If I were to trade this lower weekly edge, I would have a tight stop on it, like $1.40. And that's a very, very tight stop on this name because you have a daily ATR of about $3.50. The zone that I would really be more interested in buying a dip on would be a gap fill back down here to 97.24 by 94.44. This is a zone I would be the most interested in swing trading from, but that lower weekly edge I could potentially day trade from or get a day trade type entry and then play it for a run up to, a couple of days, 2, 3, 4 days, play it up to the upper weekly edge here at or around 107. So I would use this zone more for just a couple of days type swing trade, and I would trade this zone for a longer dated expiration. All right. GLD has a very specific zone that a pullback to 483.83 by 432.09. You have a lower weekly edge in here. You have the 9 EMA on a daily time frame in here. And it is a key Fibonacci, 38.2 by the 50 fib. I went ahead and left the 618 here so that I would know where the 618 is of this up move. This is a key level for bulls to hold on a pullback, but I would definitely be interested in buying a pullback to this daily cloud. And why? Well, look at pullbacks to the daily cloud. How well priced reacts off of the top of this cloud. So my zone to trade for GLD for a swing trade is going to be down here near 439. So I'm going to set me an alert, and if gold happens to pull back there, that's where I'm looking to swing trade it from. Okay. Halliburton has reported earnings. I took a leap trade in Halliburton last year. I have not set one up for this year. As far as buy zones go for Halliburton, on this daily chart. I can point out the target. First target would be 35.12 right there on Halliburton. I know this is nowhere near all-time highs, so we're just going to look here and see. Next target would be 37.08 and then 39.85. So 37-ish, 37.08, doesn't have to be exact, and then 39. So that's going to give me, I'm using that higher time frame, the weekly chart, to get some targets on this daily chart. So these would be my targets to the upside. Now, where would I want to be a buyer? I'm looking at the lower weekly edge. Notice the inside and then up candlestick structure from here. So a small, maybe $1 type of risk on this zone, and reward's going to be just short of $3. Nice risk to reward, very small as far as the risk amount goes, but I'm okay with that. I don't particularly worry about a small zone because I wait for confirmation in these zones. Price could just keep dropping through this zone, and then I would look at this double stack of edges by this buy zone here as my next area to potentially be a buyer at. So this is a zone that I will be watching this week using the lower weekly edge, 32.28 to 31.44, and then these would be my targets to the upside. Intel, I said that I am watching Intel after that big pullback. This is a zone that I am interested in potentially buying a dip. Again, I will wait for some sort of confirmation that price is done dipping. But the levels that I'm interested in are 44.24, then 41.83. The bottom of this zone is 38.95. And then for targets back to the upside, I'd be playing it back up to about $53 to $55. Okay? So that's the zone I'm watching on Intel. It did have the big day down today, down 18.5%. And I'm going to let this just shake out a couple of days at least, potentially pull deeper back into this buy zone, and then look to play the trade back to the upside. Now, if you want a more conservative first target than that upper weekly edge, what I would do is run my Fibonacci's from that gap fill down to wherever the low is when I get in the trade, and then playing it back up to the 50 to the 618 and setting that as a first target. I just don't know where that low is going to be, but just know that once I get in the trade and I have a low, I'm going to run some fibs to get me a first target, okay? IWM, I left it on my list to potentially get a swing trade. It's another one that it's set up in the zone that I gave you on Saturday, and it was a great buy at 261. It traded up $10 in a couple of days. So it was a great buy there at the buy zone from last week. Again, I've got an alert at the lower weekly edge. Stop would be a daily candle. Close below 258.24. And I would be targeting 270. All right, I put Kroger on the list. Kroger has earnings, I think the beginning of March. Yeah, beginning of March. Kroger's trying to break out here. Kroger is trying to break out and fill this gap right here. Kroger is an ACDC setup if you trade in the trendy room. And you've heard us talk about the ACDC setups. This is an example of an ACDC bull. As price pushes above the decelerator arrows, that is a bullish play to the upside. Your first target that we like to use is the opposite arrows, in this case the accelerator arrows. And then as far as the target, you're targeting the upper monthly edge. So this trade would look just like this, and I'm going to put the target here at the yearly edge mid by that upper monthly edge. So it's a long above these decelerator arrows, trimming at or around 65 and targeting 66.5 by 67.5. All right. And again, on that daily chart, you can see it's trying to break out and potentially fill the gap, which would play into those same targets that I gave you on the 4-hour chart. All right. Monster's still on my list. This thing just keeps going. Aw, thanks, Lori. Yeah, y'all hit the like button. I always forget to ask about that, but thank you. All right. Monster just keeps on monstering. Look at this imbalance candle here. This is why I left it on my watch list. I love buying pullbacks when you got a big imbalance candle. This means price moved very fast from this zone, which means there's a higher probability there's still blocks of orders waiting to be filled down here. So Monster's buy zone for me is 78.39 by 76.87 and targeting back up here at 81.67 near the all-time high. Okay. Rocket Lab has earnings the end of February. It has pulled back into this buy zone. I've got some levels inside of the buy zone, but I will watch it here. I think it's a dip buy in this buy zone. My plan is to do a starter type position at the top of the zone and then add to full allocation towards the bottom half of the zone, and then play it back up to the upper weekly edge and the high at 99.58. All right. Schlumberger has reported earnings, blew through that daily supply zone. Obviously, a very tested zone there. But we're going to go to the higher time frame chart. You can see some of these names that really got beat up. That's what I'm having to do, is go to the weekly charts to get the zones, okay? So on Schlumberger here, on the weekly chart, to find that sell zone, you want to go up and to the left and find that inside and down candlestick structure. Now, in this case, there is several zones, and they're basically stacked on top of each other. So rather than draw them out as separate zones, I just combine them. And that's going to give me my target on Schlumberger. Now, this previous yearly edge would also be a target for me. Okay? As far as a buy zone, where would I be a buyer on this name? I want to look at that daily chart and get an idea of where my lower weekly edge is and where we started this really nice move up. And that's going to give me my buy zone for Schlumberger, okay? Well, I don't know what happened there. So I want to be a buyer at 47.10 by 45.98. And then I'm going to target 51, 53 and a half, and 56.32 to 62.12 on Schlumberger. Okay. Again, that upper zone is on a weekly chart. This is the previous yearly edge, last year's yearly edge, and then I've got a weekly upper weekly edge here. So those are my targets to the upside buying a potential dip down here using the daily chart. All right. Let's see, Taiwan semis. Let's talk about this semiconductor name. Nice inside week here. If the semiconductors and Taiwan semis is bullish next week, then I would expect price up here near 341 to 351. As far as a dip buy, I wanted an alert at the lower weekly edge. All right, at 327 and a half, but my actual buy zone is 322.10 to 316.14, and again playing it back up to 340 by 351. And United National Foods is another name that could be potentially breaking out here. It has a beautiful daily squeeze that is pretty tight, and you're at the top of the chop right now, so I would prefer a dip buy back into this inside and up candlestick structure. This is another name that if we're playing the ACDC, this is setting up into an ACDC bull trade. Now the stop is below these decelerator arrows, but I would use the weekly edge by this pivot low here as my stop. So the stop would be 33.36. Now price is currently right where I would trim at, and then my target is the upper monthly edge up here. Okay, so it's an ACDC play, but I also like it from this daily buy zone up to these targets. All right, cool. Looks like it took me an hour, but got through my potential watch list here for next week. Again, I always am keeping my eye on the bigger picture and the overall market. I know that right now we're sitting right at resistance, a double stack of edges, and I have a sell zone right above. Okay, so I'm not looking to go long if we gap up into a sell zone on the bigger picture. Okay, Casey, you want me to look at... I do. Nyla, let me answer y'all's questions here real quick. I'll give you some more time. I'm going to start from the top. Green eggs and Cam, if Kroger's in XLP breaks out, it may bode well for the market. May not bode well for the market. Well, it just means that your Mag 7 names might not be doing as well, but we can still make money. That money, big money doesn't put that under their mattress, right? They just find other areas of the market to put to buy. And that's where, you know, as a trader, we got to be good at not just trading the shiny toys, but we got to know how to buy the more defensive areas, and Kroger could be one of those areas. Do I use the same confirmation process in a buy and sell zone like in day trades? Nyla, I do, but obviously higher time frame candles for my confirmation. So if I'm trading from a daily buy or sell zone or a 4-hour buy or sell zone, I'm typically using 1 hour candles for confirmation. And The smallest time frame candle I use is a 30-minute candle. Looking for, if it's in a buy zone, looking for a higher low and then a break above. So same confirmation process, just higher time frame candles for the confirmation. Let's see. Look at GFS for April calls. You bet. Let's look. GFS for April. Oh, okay. Getting a pullback. You have earnings in a couple weeks, right? Middle of February. As long as you're cool with holding those through earnings. You have your lower weekly edge right here. This is when I said, ooh, I liked this consolidation that happened here. I would say put an alert here at GFS at your lower weekly edge if you're looking to buy a dip, right? I would put an alert at my lower weekly edge, but this is a zone. This is the consolidation area that price consolidated and then really took off from. Now we almost got a pullback here. That's going to be pretty darn close. Technically, it did not come all the way back to the buy zone, but it was close enough that I would call it a test. But nonetheless, this is where I would be interested in buying the dip on GFS. Now you do have an inside and down that created a sell zone or a supply zone. So this would be my target to the upside. So again, I would set an alert here at the lower weekly edge to potentially buy the dip here at 40.91. Here's the zone I'm really interested in. Let's call it $40 by 38.68, and then playing it back up to 45 by 46.66. Okay? When do you initiate AC/DC trades? As soon as it moves past the DC arrows? Yeah, you know, sometimes I don't see them until prices already moved past the arrows. I think UNFI is an example. So I didn't see it as it moved past the arrows, so obviously I didn't get it on there. But this is where on an AC/DC trade, after it's already gotten past the decelerator arrows, I just find the buy zone right about at those arrows, right? Or you could use the trendy edge, and I would just wait for a pullback down near here and then go ahead and initiate the trade back up to ultimately the upper monthly edge. Thanks, Janet. Appreciate you. And yes, I will have a great time. By the way, if anyone is at or near New York City, across the Hudson, near Weehawken, Hoboken area, we're going to meet for dinner, a bunch of us, at Blue on the Hudson. It's a restaurant there. Tuesday night at 7 p.m. And if you want to come and hang out, you're more than welcome to come and hang out. Yeah, I'm going to be wearing lots of layers for sure. Lori, are you in the New York City area, Lori? Thanks, Chris M. I appreciate you. Oh, please, Anna. I would love it if you're able to make it over. I know it's a little far from you. You're on Long Island, right? Oh, Lori, you're in Michigan. I bet it's even colder there. Yeah, it's going to be cold, but I'm going to brave it. I bought snow boots. I live in Florida, guys. I bought snow boots. I bought this long insulated coat. I'm hoping I can survive. I've got a cap. I'll have some gloves. I should be okay. I won't do a lot of outsiding. This Florida blood is not used to cold temperatures. All right, guys, I'm going to hop off of here. Hit the like button. Make sure you're subscribed. If you're not a member of the Trendy Room or SPX Room at Simpler Trading, come join us. Hang out. We have a lot of fun in the rooms. We live trade together. Trendy John and I educate all throughout the day, and we would love to have you come and be a part of the family. All right, I will see you in the live trading rooms next week, or I will see you back here on YouTube with the next video. Y'all have an awesome weekend. Stay warm, stay safe if you're in the path of this storm. All right, have a great weekend.